Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. La diffusion vient de démarrer. Tous les participants sont en mode écoute seul.
Okay, hello everyone, and I assume that you can hear me just fine and you can see the screen. So yes, I'm seeing all the yeses. That's good. That's good news. So I want to welcome everybody to day 20. Wow, day 20 of the 21-day challenge. Amazing. We've all gotten this far and we're still here. And nobody lost all their money. Everybody is pretty happy, I think. So it's a good thing. It's a good thing. It's been a quite a journey, to say the least. So let's start the way that we always start. Anybody with a big problem that they can't resolve, if I can help you, I'll try. So if anybody out there has got something that's just driving them crazy or they haven't been able to solve, let me know. Tom, I saw your note about the hat, so I'll definitely be letting Eric know about the hat. Anyone else have any issues that they need to talk about right away? If not, we'll get started. And I want to just remind everybody of a couple of things. So obviously it's day 20. We've really come a long way. We started out at the very beginning of not knowing anything about 10-minute trades for some of you. And now I would say that almost everyone should be able and comfortable taking a trade. And I think that almost everyone is not going to be sitting on the sidelines anymore. You know, I think we really have done what we wanted to do. So that's what I'm really, really happy about. Really happy about. I think that we have really met the task and solved it. So It's really a great thing going forward. So a reminder, definitely get the video in if you can. Try your hardest. We're not judging on production. You know, we don't care what it looks like. You know, tell us how this all went for you. We really want to know. And so today, let's see, tomorrow, right? Today is the you got to get it in. You got to get it in today. And the action step for today is going to be to block out your time to make sure you can come to tomorrow's class. Okay. Tomorrow, we will definitely be letting you know what you can do to stay with us. I mean, obviously, we care about teaching you and creating an environment that people can exist in comfortably and trade and make money. But we also want you to stay with us, and we're going to talk about that tomorrow. All right. And also, we'll have some extra training as well. It's just been a tremendous amount of stuff going on. And anyone that, you know, a couple of folks have said, well, I couldn't participate quite as much as I wanted to. You know, the links to the video are posted. So, you know, get cracking. You can watch the videos and you could try and catch up. And let's see. I traded 8:30 housing live. Yeah, 8:30. If you looked at the DMM. So, John, this morning we sent out a DMM. So, look, this is a good lesson. Besides doing futures, micro futures, which I'm going to do, let's talk about what happened this morning, because I looked at the report this morning. This morning, first thing, you got a DMM in your email, hopefully. Okay, you were scheduled to get a DMM. Now, would you have automatically traded this building permits housing report live with real money? I wouldn't have. Why not? Because out of the last 6 months, there's only been 2 winners. There's been 2 losers and 2 cancels. So that tells me there might be an issue with the setup. Okay, not every trade setup is a winner. Some trade setups have to be changed over time. This is one of those reports that hasn't been working. It just hasn't been. And if you understand how to read the DMM, the journal is the last 6 months, okay, or the last 6 trades. If we're lucky enough and the DMM has enough historical data, okay, you can understand why you shouldn't have taken that trade. You look at the journal, certainly not with live money. I would have taken it in sim. And that's exactly what I did this morning. And there was no movement with gold. It was a no fill. It didn't move the market. And if you looked at the news, what was interesting is that the news, and this was an event that we sent out a trade report for this morning, John. That's what you're missing. This is an event that took place this morning, and we had a trade report for that event. And I'm explaining why I would not have traded it. So I looked at that trade report and I said to myself, not good enough performance. I'm not interested in trading it. So I watched it. The market didn't even fill. So that's a report we need to look for a different setup. Or it just might be an event that the market isn't that interested in. And that may very well be the situation. It's possible. Also, if you looked at the news, if you looked at the result, you know what happened in the news? It's really interesting. Watch this. When you go to Forex Factory and you look at what happened after the report, building permits and housing starts, right, at 8:30. Let me see if I can find it here. You had mixed news. Building permits were negative. Housing starts were positive. When you have 2 elements in a report and they're major elements of that report and they are opposite each other, you often will not get a very good move, okay? And that's exactly what happened. The news, we call that mixed news. The news was mixed and it was not very good movement. Now, what's a way that you could trade that report and reduce your risk and still trade it live to see how that report might behave? Well, that's the point and the reason that we're here today. One of the best aspects of micro futures is that you can trade live trades for very low risk. Also, you can trade with a very small amount of money in your account. People say, well, how much do I need to trade news events? So look, if you're going to use full-size futures, then I would recommend somewhere around $7,500 and up, okay? And if you're going to trade micro futures, believe it or not, you could trade with a $1,500 account because it comes down to margin, all right? What is margin? So I discovered this morning a really great video when I was doing a little bit of extra homework for this class. I discovered this great video. I'm going to post it for everyone right now. And it's a video that if you have any doubts at all about what margin is, after you watch this short little video, you will totally understand. Putting it very simply, margin is just the minimum amount of money that you need to have in your account to take a position, okay, and not get closed out of that position by your broker. So it's a very important aspect of trading micros and or any full-size futures. In fact, you need margin to trade stocks. You need margin to trade options. The broker is not going to let you risk their money, okay? Not when they're going to do everything that they can to avoid you being able to lose their money, okay? Now, something really interesting happened more than a year ago during the pandemic, and it gives you an idea about brokers, margin, and safety. We were trading, AMP was our broker back then. Oil, if anyone remembers, the oil futures went below zero. It was unbelievable. It was unprecedented. I don't know if it ever happened previously. I had never seen it. After that incredible event, I mean, oil futures had been over $100. They went below zero in the middle of the pandemic. I believe, now this is just my opinion, I believe what happened after that is we were not allowed to trade oil futures for weeks by our broker. And like I said, our broker was AMP. I believe that when oil futures went to zero, AMP must have had a lot of losses that could not be avoided because it was such an unexpected event that they had customer accounts that they had to make good on. And I believe, this is just my opinion, I have no proof, but I believe that they lost a lot of money, that they had customers lose money that they didn't have, and someone has to pay for those contracts. And the broker is the last man standing usually. For weeks after that event, we couldn't trade oil. And then they let us start trading oil again, and the margin was astronomically high. Normally, when you trade oil, full-size oil, you have to have $2,000 in your account per contract, okay? So first thing you want to know when you're trading micros, when you're trading regular futures, how do you find out what the margins are? So with NinjaTrader, which most of us in this challenge are working with NinjaTrader. In fact, if you are a new NinjaTrader subscriber, they are the broker. In other words, you can't use another broker anymore. You have to use NinjaTrader as your broker. And that's neither bad nor good. It's just the way it is. They want to control their platform. They also want to make money as being the broker. You know, that's their business. We can't stop that. It is what it is. The margin for oil with Ninja Trader, and they have a screen, and you know what I'll do is I'll post this also. This is a really useful link that everyone trading should know. All right, so you can look up the margins. So I'm posting it right now. So again, you have to have X amount of dollars in your account so that you can afford to trade and take a position in a market. That's what margin essentially is. So if you look at oil, you go down, find the oil contract, wherever the heck it is. I'll find it. It's CL. Okay. I believe I'll find it if I can wake up. Let me see where it is. Come on, CL. Hang on. Where's my CL? Here we go. 2000 intraday margin, okay, is what you need to day trade oil futures. That's full size oil. You need $2,000 in your account per contract. Now, that doesn't mean 2,000 is enough, okay? 2,000 is not enough. You have to have more, because if you go below 2,000 per contract, they can close your trade out. So if you're trading 2 contracts, that's $4,000. You should have double the amount of money, so you don't even have to think about margin. If I have $4,000 of a margin that I need to cover, I don't want to trade that in a $5,000 account. It's not enough, in my opinion. What if something goes wrong? I don't want the broker ever stepping in to tell me what to do. But to give you an example, the micro futures, you only need $100 of margin per contract. So you can see you need a lot less money in an account to trade micros. Now, from what I'm hearing from people, AMP is charging $7,500 per contract these days. Now, I haven't looked up what AMP is charging, so I'm trusting one of you all, 7,000, but that has been my experience. And they're doing that not to keep you safe, but to keep them safe. So a couple of rules that I would follow, right? If the broker says, we are doing this to keep you safe, change the word you to us. We are doing this to keep us safe. They don't care about you all that much, right? They don't want you to blow up your account in a way that you can't pay for it, and they got to cover the cost. Just remember, the broker is not your friend. The broker is on the other side of the market. I'm not saying they're your enemy. They do many things to help you try to trade well. But when it all comes down to it, the broker is on the other side of the trade. Okay? So just remember that. You can count on yourself and the people you put around you, and that is critical. So margin is one of the most important elements of trading micros and trading futures in general. So if you understand some of the elements in this margin sheet, and if you watch the video I sent, you will understand. Intraday margin is a fancy way that they call day trade margin. And then the initial margin is also the overnight margin. So if you want to hold a position, for instance, after the markets close, after 4 p.m. theoretically, or after 5 o'clock theoretically. I'm sorry, my dog is barking. Hang on 1 second. Someone's picking up a package. One second. Someone's picking up a package here. So the margin The margin is the initial margin is the overnight margin. So in other words, if you want to hold a position when the markets close, you can't use the small intraday margin. There's an overnight margin. It's much more expensive if you're going to hold positions when the market is theoretically closed. Now, futures are interesting because they trade more than 23 hours a day. Okay, futures rarely close, yet the brokers still raise the margin significantly. Even though the futures markets are open overnight, you can trade and get out of a position overnight, different than other instruments. So one of the main things that you can do when you're trading micros or trading regular futures, you can trade almost 24 hours a day. The markets are not closed very long. So you've got the main thing. So there are a couple of main reasons why you might want to trade micros. A, you don't have a lot of money in your account and you want to trade exactly the way you want to trade. That's very important. You know, we've been looking at funding companies. A lot of people, you know, right now funding companies are the hot ticket. Everybody's jumping on funding companies because they think it's a ticket to trading other people's money. Very few people succeed trading other people's money. They make it extremely difficult to trade the news. They're now saying, yes, you can trade the news, but then when you read through or watch their videos, they're not always going to pay for news trading. They're going to call it inconsistent style trading. Their breakouts, their brackets don't work properly. You're much better off trading on your own in a micro futures account where you can control everything that you want to do and not depend on somebody else to get and to do whatever you want to do with trading. So I would recommend, if you just have very little money, I would recommend trading with micros. The whole catch about funding accounts is resets. And the way those companies make the bulk of their money is when traders blow up their account trying to get funded. It's called resets. So there are many funding companies out there. Very carefully research their rules. They all have different rules, and you'll find that they're going to be really picky and very specific about the way you have to trade. And they charge you money to stay with them monthly. You know, there's fees for everything. Think about all that money. For, you know, $1,500, you can practice real live trading on your own, doing it exactly the way you want, trading micro futures. So that's a fantastic benefit. Micro futures have way less margin, okay? I mean, way less margin. They also allow you to trade with much smaller accounts. You can take and practice the same type of trading so that it makes it easier to upgrade to the big brother future accounts as you get better as a trader. But you also want to be careful about liquidity. Not every micro is tradable. There are bond micros. They don't have volume. They don't have liquidity. So for instance, the brokers will tell you that there is a bond micro called the 10-year micro or the 30-year micro. But when you look at the charts are virtually untradeable. Now, there's an interesting way to trade bonds at a little bit lower cost. It's not quite micro, but there's a symbol called ZF, and it's the 5-year. And if you type in ZF 322, you'll see a current, hang on one sec, ZF 323, sorry. It's going to get hard to getting used to next year. And you'll see, and here's what you could do if you're a beginning trader. You might want to put a volume indicator on your chart just as a general rule, okay? So I've got this volume indicator that's just a part of Ninja for free. If you right-click your chart, just go to indicator, scroll down to VOL. And you could also use volume up, down. That's a nice little indicator. Nothing wrong with that. And if you put a volume indicator on your chart, you can see the number of contracts, okay? There's another tool you can use, and this is helpful because if you're trying to trade a micro and it doesn't have good liquidity, you might want to have the data box on your screen also show the data, okay? Because you can click on a candle and the data box shows you the volume on that particular candle. So it's very useful to be able to tell if a particular instrument might have enough liquidity. Another way that you could tell, sometimes this is so far from being rocket science. It's so logical and so simple. And it happened actually last week. We had a daily report. We were right at rollover, and the market that we were recommending trading had just closed and moved to the next contract. But not everybody who traded with us realized that, because some people are new. And when they went to put the instrument on their chart, the chart kind of looked like this. So if you go to trade a chart, and this is why I say it's not rocket science, if you go to trade a chart and your chart looks like that, that's a big heads up that you're trying to trade an instrument that doesn't have the correct volume. It's probably the wrong contract in terms of the date, but it's just logical. If something doesn't look right, then it isn't right, okay? So don't try to squeeze, a gigantic box of Cheerios into a tiny little bowl of milk. It won't fit, okay? Just figure out what the correct contract is. And if you don't know what the bond contract is, but you know the prefix, in other words, bonds are ZB for the 30-year bond, you could just type the prefix into your chart, ZB, and then you'll notice there's a bunch of columns here, all CFD crypto. One of them is future. You could click on future, and then ZB is the future, double click it, and bingo, it tells me the current contract for bonds. So maybe I want to trade gold or mini gold, okay, MGC. And I click on future, double click MGC, and the current contract for the micro gold is 2 MGC 223. Now, some brokers do charge improper amounts to trade the micros on their commissions, okay? The brokers, they're always looking for ways to make money. And one of the ways they make money on micros is they're not really doing great discounts on trading micros. They're still charging plenty of money to get in the market and get out of the market. So you got to keep that in mind. Every time you make a trade, it costs money, okay? Taking the trade costs money. Now, the other reason, obviously, that people trade micros, the main reason, of course, is, believe it or not, for me, the main reason is testing, because I'm a lunatic tester. I can test live, because some of the contracts have really good volume, like the mini ES, the MES, the mini NASDAQ, the MNQ. They have very good volume. The oil micro has very good volume. So you can test our real breakout trades with micros, and we can know for sure how those trades are working. When you get a micro that doesn't have good liquidity, you're not going to get good testing as well. So testing is a great reason for micros. Not having a ton of money in your account is a great reason for micros. Just wanting to take less risk on a specific trade. Maybe that day it's very volatile, or maybe it's a Fed day, and you want to test the strategy for the bonds during the FOMC statement. it's a great way to test and not put all that much money at risk. So it's a great way to trade without blowing up your account. But, and you can't be more clear and more honest here. Don't believe that you can't blow up an account with micros. You can destroy an account trading micros just as easily as you can trading full size. You might fall into bad habits, revenge trading, jumping into a trade right after you get out of the loser. You don't want to break any of your normal rules just because you're trading micros. You want to follow your plan, follow your rules, and it's a great way to trade with less money and learn. It's a great way to learn. Also, another really strong reason for trading with micros. Now, there's another way that you can look for liquidity. So what is liquidity anyway? What do I mean when I say liquidity? So a very simple explanation would be that liquidity is are there orders? Are there available orders if you're going to take a trade? If there are not available orders, what could happen, right? So let's say you want to buy gold, micro gold, at 1830. And there's no other orders until you get to 1832. That means there's not very much liquidity because gold should have orders every 10 cents. You don't want to put an order in, a market order that gets filled at the next best order, right? A market order, it'll fill you at the next order that's available usually. If that next order that's available is unusually far away from where you think you're going to get filled because there's not a lot of orders in the market, that's bad liquidity. Sometimes when the market moves very fast, liquidity becomes challenged. Orders don't get filled because there's not a lot of volume. They say sometimes that the liquidity dries up, and it does. A lot of times people don't want to be in the market at the exact moment as a news trade, as a news event. So sometimes people pull their orders out of the market. That creates a liquidity crisis or liquidity crunch at the time of the news. And that's why sometimes you'll get filled at the bottom of a candle or the top of the candle instead of right at the beginning of the candle, which would have given you an awesome trade. So you just have to understand how liquidity can play into an event and the way you get filled and how it gets traded. You can also see the liquidity if you pay for the data that gives you liquidity. You can go to New, you can go to Superdome in NinjaTrader, and you could pull up the dome, okay? And a lot of trading platforms have domes. Domes, by definition, show you the liquidity. They show you the orders. Normally, what a dome will do, it'll show you the buy side of the market and the sell side, and it'll show you the current price, which on Ninja is highlighted in yellow. And then they'll show you the orders that are available at each price level. Now, look, most of the time it's reasonably honest, okay? Most of the time it's reasonably honest. But it could also be that people are holding back their orders. There's probably software out there that can hide orders. So you don't want to get married to anything you see, but it'll give you an idea if a market you want to trade is tradable. So micro gold, make sure you're on the proper instrument, right? I'm on micro gold. It's not the highest liquid instrument that we trade. It's not a very strong liquid market, okay? Because if you compare the numbers, there's only, 10 orders there. It's not a lot of orders, but if you look at bonds, the ZN, or let's talk about ZF for a second. ZF is the 5-year, and there's over 1,000, contracts at certain price points. So liquidity, you want there to be as many orders as possible available. So when you pay for the data that shows you liquidity, you can see the orders. And you could look at an instrument and gauge whether it might be liquid enough to take a trade. So I could look at the British pound, the liquidity. It's medium, nothing to write home about, but you know, we trade it. It's okay. You could look at the 5-year. We looked at any instrument that has a current contract you can look at on the dome. Okay. Australian dollar. You can also trade on the dome. We're not going to get into that in this particular challenge, but you can click on various price levels and get taken into the market or sell yourself out of the market. So the dome can be useful, okay? As it's sort of like an alternative to chart trading. What is chart trading? Chart trading is if I put an order on the chart, for instance, and I can move the orders around, manipulate them, move my stops. We call that chart trading, okay? That's a feature that we could not live without micros or major size futures. So, you know, the main things about micros, they're really so much like trading normal size futures. The big issue is risk, the fact you can practice with less cost, less margin required. Everything is less, but it can help you to create and turn yourself into a better trader. So that's the key with micros. So you think about, you got to be able to understand margin, make sure you can read the margin charts, and then make sure that you're also able to determine if an instrument should be traded. So some of the popular instruments that we recommend for event trading: micro gold. I say micro because gold doesn't have a mini gold. Gold MGC is a mini. And all that means is it's just a little bit more expensive to trade and might need a little bit more margin. Mini gold has been around much longer than the micros, and it's just because it's been around, it got popular. So I don't think they can unseat it right now with a new instrument, and they didn't really try to create one. For the NQ, you've got MNQ. MNQ 0323 is the current contract right now. And in fact, you know, give you an example of why we might use it. We have an NQ open strategy. It's a $2,000 risk per two contracts. In other words, $1,000 per contract, because it's got a very big stop. So, you know, you need a big account to trade that strategy. If you're going to risk $2,000 a couple, you know, maybe 3 or 4 times a week to trade the market open, you don't want to trade that in a $5,000 account. You could, you know, destroy your whole account with 1 or 2 bad trades. But you can trade the micros because I'd only be risking $200 on that trade. So if I have, you know, $5,000 or even $2,500 in a micro account, I could certainly trade one contract with that big of a stop, and I could work on learning to trade the NQ open, the ES open. I would use the MES instead of the ES. Significant difference in risk. Also, you've got the MYM, the mini Dow, micro Dow. You got the micro Russell, M2K. And then we found a very interesting mini, okay, natural gas. You've got, now natural gas can be Satan, right? Most people probably should never trade natural gas because it can do things in terms of its price movement, price activity, liquidity challenges that could really be expensive to trade. It also can be very rewarding to trade, and that's why people still flock to it, but it's very difficult to trade. We discovered not that long ago there is a mini natural gas, QG 0223. Let's make that cute. Now, this is a good thing that happened. I'm glad this happened. A lot of times we will go to a chart. You'll put your instrument on the chart. You'll get that crazy long bar. And that tells you the contract is not current yet, okay? 99 times out of 100. So I tried to put on QG 223. I do know that natural gas has a new contract every month. And I do know that when I get that goofy looking line, that candle, that my contract is not effective yet. It hasn't opened for trading. So I would do QG 0123. I go back to the previous contract 1 month in natural gas, and bingo, I've got a normal chart. Now, every now and then there might be a reason why you might want to trade a contract that's open but has lower volume, and you get that crazy candle. Now, I'm taking a shot here because I don't know if I remember how to do this. So let me, rather than be crazy, give me 1 second. If I can do this, I'll show you how to get rid of that candle. If you go to tools and options and trading, and you change the merge, all right? Change the merge. So let me just find where the merge is. It'll get rid of it. So I'm not going to waste time on this, but in one of these settings here, because I haven't looked at it in 100 years, if you change the merge feature, and I just can't find it right now, and like I said, I don't want to spend a lot of time on it. I wasn't planning on doing it, or I would have found it for you. If you change the way the data is merging, and someone out there is going to tell me where it is. Okay, it's in market data. But you just change that merge. It's under mark. I'll try, I just can't stop myself from looking. And over here it is, global merge policy. Okay, so it's in market data, global merge policy. And I believe if you change to do not merge, let's see if that's the correct, and we go to QG. There you go, QG 223. Now, why you might want to trade that contract, I'm not sure you want to do that, because you can tell just by looking at that chart that the volume is low. The candles aren't fully formed properly, okay? So it's just a way to get a chart looking normal if you want to have it look normal. But I probably would not trade a chart and an instrument doesn't have proper liquidity, okay? I mean, it's very, very important. So micro futures, we found QG as a great way to trade the natural gas report with a track trade also, and I'll probably trade it Thursday in the trade room because we've been testing it every week for the past couple of weeks. And it's a great example of trading not a full-size instrument, and using something with less risk and less value in terms of how much money you have to have in your account. But it still has a decent tick value. It's a 1250 tick value, but it's actually 5 ticks per tick. In other words, it's got 5 ticks of price. Natural gas usually trades 10 cents a tick. This particular instrument is 5 ticks in a tick. So it's got 35, 40, 45, 50 instead of being 30, 31, 32. But again, it's an interesting alternative to full size. So you've also got I'll give you the top 5 or 6 micros that I would recommend trading for news events. You've got MGC for gold, which is a mini, but we still call it a micro. It's perfect. You've got MNQ, MES, MYM, MCL. Those are our absolute favorites. People have been trading the Euro micro. It seems to have decent volume. M6E, okay? 0323. It's not phenomenal because if I put the euro on, right, and I put a volume chart indicator on my chart, let's see if I'm right here. I think you're going to find that the euro has much better volume. And, it's not bad. Okay. I'll stand by the fact that the volume is not bad. The volume's not real big right now on either. Okay. It's not prime euro time anyway, right? Their markets are officially closed a couple of like 12:30, 11:30, 12:30. Their markets are shutting down. So their volume is going to dry up like our volume dries up at 4 p.m., right? Now, if you want to know how to turn the crosshair on and off on your chart, see how you get this little arrow, but on this chart I have crosshairs, so I could look at individual candles real nicely. Just right click the chart, go down to crosshair and put it on local, for instance, and now I can look at the most recent candle and also see that the volume was pretty low, but it was almost not that much higher on the regular size instrument. Okay, so just to go over them again, you've got M6E, MNQ, MGC, MYM, MES, okay, M2K if you're in the Russell, MCL for oil. And then what I would do if you want to trade bonds, the bond micros have very little volume. In my opinion, they are not tradable. Trade the ZF. The ZF is the 5-year, okay? It's theoretically a full-size instrument, right? But it's only $5 a tick, which is very reasonable. So you could put ZF 0323 on your chart. And most news events that move on ZN, which is the 15-year bond, or on ZB, the 30-year, most events will move very nicely on ZF for a much lower tick count. ZB, the 30-year, is $31 a tick and change. The ZN is $15 a tick and change, and the ZF is only $5. But even more importantly, the margin, all right? Let me show you the margin because that's great what the margin is on ZF. It's very low. And I would make the margin sheet something that I look at regularly because, we are seeing the brokers will sometimes raise margin minutes before a volatile news event. That's something that we are seeing more and more. See, we have a war going on, and we have a Fed that is just hell-bent on raising rates until the world comes to an end. I mean, the Fed is just out of control, raising rates nonstop, okay? That is creating tremendous volatility in the bond markets and tremendous volatility in the markets in general. Now, it's just my opinion. I'm no expert on interest rates. I just think the Fed should pause, let their changes take effect, not just continue. Just my personal opinion. But if you look at ZF, all right, the margin is $500. So, in a $3,000 account or in a $2,500 account, you could trade one ZF, maybe even two if you're careful, and do some serious trading with, bonds. There's a lot of reports, a lot of events that will move trading bonds. So for me, I kind of see the ZF as a fake micro. It's not quite a micro, but it's a low risk way to trade news events with a reasonable price point, and your volatility isn't out of control like the NQ. Like the NQ is only $5 a tick also, but let's be honest, the NQ volatility is off the cuff, right? It's out of control. volatility on the NQ. There were some earning trades last quarter. We never, ever, ever experienced it happening before, where the NQ was moving so volatile. At the end of the day, it wasn't moving in ticks. It was moving in chunks of points, and we couldn't take earnings trades that one day. Now, one more thing before I take questions and finish up. I mean, I've got to tell you a funny story. I hated micros. You know, it's just like, you know, you reach a certain point in your life, you get very set in your ways, you get very stubborn. I try to keep my mind really open, because if you have a closed mind in trading, you're not going to be open to new everything. We all know you have to have an open mind in trading. You can't be stubborn. I just thought to myself, you got to be a big baby to trade micros. They're ridiculous. They're silly. And then, of course, you know, you do a little research, you do a little thinking, you open your mind, open your heart to micros, right? And micros, it's a great way to trade multiple contracts. You can practice. You know, you could trade 3, 4, 5 contracts. A person that would never dream of doing that with full size because of the risk and the fear. You could trade with less fear. There's so many great reasons why micros are a fantastic way to trade. And when I finally realized that, it changed so many things in the trade room. We took so many more trades live, which led to taking so many more extra trades live with full size futures. So you definitely want to open your trading to micros. They're a great way to get your feet wet, to learn, and to become an expert so you can move on to full size. Okay? Any questions, folks? I hope I covered the main reasons that I think micros are important. And, you know, in terms of strategies, a couple of things that you could do, like, for instance, if you have a setup, of, for instance, you have a DMM and it calls for a full-size instrument, right? So, for instance, today's housing starts, building permits. You can leave your targets in place, because most probably the targets aren't necessarily going to change dramatically if you use full size or micros, but you can increase your stop. You know, you can increase. One of the things we know is that in volatile markets, if you can afford to double and triple your stops, you can survive a whipsaw that you might not be able to survive with a full-size contract, because the risk is too much to use a stop that big if it doesn't survive. So a great thing about micros is you can increase your stops. And here's the crazy thing that makes no sense if you're just thinking about money. People think if you reduce your stop size, you create better risk, when many times it's the opposite. When you reduce your stop, you often make yourself much more prone to being stopped out. But when you increase your stop, and we know this, and it pays us all the time on our earnings trades, when we finally wised up and increased our stops on earnings trades dramatically, our win rates and our profitability went way up, way up. Okay. So you can use micros to increase your stops. So if I have a 10 tick stop on a DMM that I'm trading with regular gold, like this morning's building permits, I happen to know this report. I know this report is not that impactful and not that whippy, but I still would have at least gone to a 15 tick stop probably if I were trading micros on that report. So you can make yourself safer. Excuse me, 1 second. Sorry, folks, my throat is reaching the end of the challenge. So let me give you a link. There is no, you know, I'm not giving you a complete list. Always, always, always make Google your best friend, right? Google is your best friend. Google micro futures, and you'll find a more complete list on the CME, right? So I'm not giving you a complete list. I'm giving you a list of the ones that we like. Keyvon, okay? So we like MGC, MYM, MCL, MNQ, M6E, ZF, okay? Those are the main micros that we use. You could trade, XC is a mini corn micro, but also if you look at the margin list also gives you all the popular instruments that people trade, and it lists many of the micros as well. Okay, it shows you the regular size corn, it shows you gold, it shows you mini gold, it shows you copper and micro copper. So the margin list is going to show you a lot of the instruments. And then everybody should do a little bit of their own experimentation. If you know that copper is HG 0323, right? Put on a copper chart, take a look at it, and then MHG is the micro. Put on the micro chart, and look what happens when you put on micro copper. Badly formed candles. You could tell liquidity is not good on that instrument. So either I wouldn't trade it, or I would make sure that I could afford to trade copper, okay, the full size. You can always choose not to trade if you don't have enough money to take care of a certain element in your trading, right? You don't have to trade everything. If your system is not available, your money is not available to trade it. So it isn't rocket science to know when you're safe all the time. There's plenty of times when you just know you're not safe because you know you don't have quite enough money to be trading, right? So it's not that complicated. Definitely not that complicated. I do want to thank everybody also for watching us on YouTube, okay? So thanks, everybody. I want to make sure if there's any questions. I think that, we'll post. Again, I gave you the link for the list of whatchamacallit, the margins. When you look at your margin list, it lists almost all of the popular futures instruments that people are trading. So all you got to do is Google Ninja Trader margins, and you'll be in business. You'll find everything that you need. Okay. So any last questions? Anybody want to ask me anything about anything right now? We're getting ready for the final day tomorrow, the final day, day 21. Please block off your time and join us at noon. We're going to do the awards, graduation, how to stay involved with us. It's going to be a fun, enjoyable. I mean, this has been a fantastic experience. I think everyone has had a great, great time and learned a ton. If you can't make it, it's a shame. We still would love if you make your video. Make your video no matter what. We want to know what this experience was like for you. And I think Eric's going to do an encore on Thursday for people that can't make it. But the big day is the final day. It's always the final day. So definitely come in. The action step is block out your schedule for Wednesday, 12 noon. I hope everybody had a good time and learned something. And, there's a ton of great trades coming up. I mean, some of you are going to be in the trade room tomorrow. There's a couple of events tomorrow morning before graduation that I'll probably be trading. So I'll see some of you in the trade room tomorrow. So any last questions, folks? I hope you enjoyed the presentation. Just checking to make sure if there's anything on YouTube. Unfortunately, we're not posting on YouTube right now. So you can send us an email, help at 10minutetrades.com. If you need a list of the micro futures, I'll happily send it to you. Help at 10minutetrades.com. Kevon, you got a question? Happy to answer it. What's the question, Kevon? Go ahead. Kevon. And this looks like it's going to be the last question. Yeah. Kevon, do me a favor because I get so many requests. Send that to help at 10minutetrades.com and I'll take care of it for you today. Help at 10minutetrades.com. And yeah, I'll send you the link. No problem. Okay. Any other questions, folks? Any other last questions? Okay. So everyone have a great day. For people that are in our trade room, we'll be in the trade room at 4 p.m. for the API report. Bill, I want to thank you for your video. Everybody that posted the videos, Andre and Angela, and I hope I'm not missing anyone. The videos have been great. They've been so much fun. Larry and Langford, they've really been fun to watch. Really appreciate all the nice things you've said about me. You all have made my day every single day in this challenge. So thank you, everybody. It has been a great experience. So if I missed anybody, I apologize, but I am loving the videos. They are great. So thanks, everybody. I'd love to see more, and I'll see you later at the API report. And if not, we'll see you in the trade room tomorrow. John, it's just for people that paid to be in the trade room. Okay, it's not a public room. Sorry. Okay, folks, I'll see everybody later, and have a great day.